Well, good afternoon, everyone. Welcome to the November 16th Finance and Risk Management Committee of Senate Committee Power. The committee members are both present. Do we have any public comments?
There are no public comments.
Thank you, Kimberly. Anything to add or withdraw from the agenda?
Yes, item number 6 is being continued to December.
Okay, we'll remove item 6 from the agenda. Moving on, next item is item 5, the treasurer's report.
Thank you, Chair. Good afternoon, directors. The treasurer's report for the period ending September 31, 2021 is as follows. Next slide, please. As you can see in the table and in the graph depicted in the PowerPoint slide, we continue to outperform the budget for the period by 14% over budget. Operating expenses were actually less than projected or than reported in the budget. So overall, year to date for fiscal year 2022, we reported just under 118 million in net operating revenue, with expenses to the tune of 94 million, including 92.3 million in energy costs, resulting in a $17.3 million change in our net position. And again, as depicted in the graph, the blue bar represents the actual results. The orange bar depicts the budget. Next slide, please. Continuing on, comparison of the year-to-date results as it compares to our projection. Again, we report for the month of September over what we actually projected in terms of the net operating revenue to the tune of just under 2 million. Expenses were actually less than projected, which is a good metrics for us, resulting in a net change being 3.1 million over what we projected for the period. So overall, the agency continues to operate positively from a fiscal standpoint, and we are hopeful that we'll be able to continue along these trends. That concludes the treasurer's report, and I'll give it back over to you, Chair Moore.
Thank you very much. Any comments or questions regarding the treasurer's report?
Anytime you see those numbers, that's a good thing. Thanks.
Trend,
Thank you.
heading in the right direction. Thank you. Yes, agreed. Okay, next item is item 7, the preliminary audit for FY21.
I believe the auditors should be on the call to present this portion of this agenda item.
Eric, what are the names of the auditors again?
I'm looking for Brett Bradford.
Okay, I just let him in.
Yes.
Okay.
I am here. Hello, everybody.
Hi, Brett. Thank you so much for joining us. You're up with item number 7.
Wonderful. Oh, and here are our slides. Good afternoon, everybody. Good to be back once again. My name is Brett Bradford from Vicente and Brinker. If you could advance the slide, please. A little bit of background on me and the manager, Andrea. Andrea was not able to make it today. She's on the cusp of becoming a mother. We've been working in the CCA space for several years, though, and are currently working with several different CCAs throughout the state, and are happy to be working with San Diego once again. So if you could advance the slide, please. So this first slide takes us through just some of the relative roles and responsibility between management and the auditor. Management is responsible for preparing the financial statements and establishing a system of internal control. And the auditor is responsible for auditing the financial statements. And we do that by considering risks of material misstatement in the financial statements, which we call inherent risk. And then we consider the internal controls relevant to those risks, which we call control risk. We perform tests of year-end balances based on the results of that risk assessment. And then we also look at evaluate the adequacy of disclosures. So Eric and Maher and their team draft the financial statements. Our job is to audit. If we were drafting the financial statements, we wouldn't be independent. So it's much better for them to do that, of course. And then once we conclude, our actual work product, so to speak, will be the pages in the front with our audit report. If you could advance, please. All right, the 2021 audit is substantially complete, and we anticipate reporting an unmodified opinion, and that means it's a standard opinion, which means that based on our audit, the financial statements are materially accurate. That unmodified is a little bit of auditor speak, sounds a little weird, but that is what we call it. And along with that, no significant deficiencies in internal control have been identified. So that is also a good thing. You can advance, please. So this slide and the next one take us through some of the higher levels of our risk assessment. By the way, I didn't say this at the beginning, but please feel free to interrupt with any questions, since the purpose of us being here is information exchange. Significant areas of our focus are cash and securities. We confirm those directly with financial institutions. So positive confirmation on everything there. And going down the balance sheet, we look at accrued revenue, energy settlements receivable, and revenue as well. It's important that we're scooping up all of the revenue that belongs in the period based on the sale of electricity, whether or not it was actually billed at year end. We do that primarily by reviewing subsequent cash receipts. And then we also create a sample of actual customers and trace those through specifically. And then we go on to accrued liabilities. Generally, we're reviewing subsequent cash payments and invoices for the liabilities. The point there of looking at cash payments is to make sure that there are no unrecorded liabilities. So we look at all cash payments and then see if there is something that should have been accrued for at year end. Debt, send confirmations directly to the lenders. Then on the financial statement note disclosures, we make sure they're complete in accordance with GAAP and without bias. Advance, please. The next few slides are just some of our required board communications that we have to make. The significant accounting policies adopted by SDCP throughout the year and period audited appeared appropriate and consistently applied. That's a good thing. No alternative treatments of accounting principles for material items in the financial statements were discussed with management. So that just means there was nothing quirky that could have gone either way on the accounting. So that's a good thing too. Could advance, please. We did not propose any adjustments to the financial statements. That's a very good thing right there. It means we didn't detect any errors that were large enough for us to propose an adjustment. We did not identify any significant or unusual transactions or applications of accounting principles where a lack of authoritative guidance exists. Again, these are some of the required statements on our part. The point of that one is that there wasn't any accounting issues where there was a different choice in the direction that the organization could have gone. And if you could advance to the next one, please. There are no disagreements with management concerning the scope of our audits, the application of accounting principles, or the basis for management's judgments on any significant matters. And we did not encounter any difficulties in dealing with management during the performance of the audits. And to the next one. That is the last slide. I'm happy to answer any questions.
Well, thanks, Brett. From my perspective, and I'm at the city of Imperial Beach, that's a pretty perfect audit. I don't say perfect because nothing's perfect, I guess, in government, but I'd give it an A+. I ran a nonprofit for my professional life, and then obviously at the city where we really improved our audits. So I guess this sets the benchmark, right? Is that sort of what we'd be looking for, the perfection to achieve in terms of the benchmark, right? And as we go forward?
Yeah, comparing, I've audited cities and not-for-profits. all the CCAs, the ones that we've been working with at least, have a few really good things going for them. Only doing one program for the most part, that keeps it simple. Cities, they get kind of they might get many different programs that they have to operate into many different funds, and it gets complicated and compliance gets tough, and internal controls can get strained. So doing one thing is a good thing. The second thing is with Mr. Washington and his team in Maher. Maher's got the experience working with many CCAs. That helps because there's some tricky accounting. There's some very industry specific transactions that need to be recorded, and they've got the technical know-how and the manpower to get it done. So you're not facing any staffing challenges there. I guess you could say a lot of people are facing staffing challenges these days, but so you've got the right team to take care of it as well. That is an unusual situation in government. I won't lie. In my experience, that is, but that's a great thing.
Well, it's good, Eric. I guess, again, your MVP, it's World Series, whatever, in the first year. So not first year. Yeah, actually our first year, right? So anyway, great job.
Good job, SDCP staff. Really appreciate it. Thank you. Now we're on to item 8, announcements. Anything from Imperial Beach, Mayor DeVito?
I'm fine.
Very good. I see the EPA is starting to compile some projects that hopefully we can get some funding for to get the Tijuana River cleaned up. I have no further announcements. With that, we are adjourned.
Thank you all.
Thank you, everyone.
Thanks, everyone.
Bill, I should have thanked you. I'm sorry.